What's going on, everybody, and welcome back to the Fear of Being Average trading channel. And today I'm going to be going over which order blocks you should use. This is going to be a simple video but yet informative, because I get this question a lot on which order blocks you should use, because people struggle with understanding which order blocks are high probability and low probability. And this is something I used to struggle with personally, so I thought this would be a great video to help you guys with. So let's get right on into it. So you guys got to understand the difference between a high probability order blocks and low probability order blocks. Okay, so the benefits of each: when you're trading with high probability order blocks, you're going to get less trades a week, but they're going to be more likely to hit TP and go in your direction. Low probability order blocks, you're going to get more of them. You're going to see way more times where you can get into trades, and there's going to be a less percentage of a win rate. You're not going to win as many trades because they're lower probability, but you will get more trades. So the difference is high probability, less trades; higher probability of winning; low probability, more trade opportunities, less of a chance of winning. So basically, you want to learn to trade off of higher time frame order blocks. That's really what it comes down to. So I'm going to show you guys examples of high probability order blocks being respected. So in this case, we are on the daily time frame on US30, and we're just going to use this random example right here. So mind you, before I really get into it, you guys got to understand that the market is fractal, and everything you see on the lower time frame happens on the higher time frame. It just takes longer, and you got to learn to see it. So right here, you can see price traded higher, left this last down candle before this up move. So this would be classified as a daily bullish order block. Why? Because when price trades down into this area, we're going to expect reason for price to go higher. So as you can see, when price traded into the daily order block, it then had a extreme push of about 1300 pips and then topped out at 1700 pips. This is just from one daily order block. So mind you, this might have taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 days for price to create this, go up to create a high and then retrace. So it's 21 days for this trade scenario to set up. But when it did, it was very high probability, and you would have been able to catch a big expansion up to about 1700 pips off of this move. Mind you, then we're going to move the daily order block again. We're going to move it over once again, and you can see when price traded into it a second time, it had another reaction. Even though it wasn't as great as this reaction right here, it had a push for about up to 7,000 to 1,200 to 1,000 pip move, which is still a crazy. I don't think you guys understand how big these moves are. And keeping in mind, when price traded to these order blocks, it didn't go far away from it. Like, it stayed from this right here 80 pips away from that daily order block, and here maybe it's like 230. It didn't go deep into it. It didn't even tap into the overall 50% of that daily order block. You see, it didn't tap into the 50%. But then what happened? After price traded off of this order block again, it traded down to it one last time, and in this case scenario, it did trade to the 50%. And look what happened. Traded right to the pip, and from here, this is where we got our biggest move of about 2,200 pips, 2,100 pips right now, and created an all-time high. These are all based off of one daily order block, and it's a high probability order block. Even though you could have been waiting weeks on weeks for trades to set up, when it did and you would have held it, you would have had the highest probability of having a winning trade. So now let's move on to the 4-hour, because this is going to be more for people that are intraday trading, day trading, and are looking for more setups during the day. So let's just look for, we're gonna have this, look at this area and price as of right now. So what I'm paying attention to is I'm looking at price from here and over. So from this line and over, this is 1 week. So pay attention to all these, because these are 4-hour. So what you're gonna want to do is look for 4-hour order blocks, because the high probability order blocks, in my opinion, are 4-hour, 1 hour, 1 week, and 1 month order blocks. That's personally what I define as the high probability order block. Some people might think a 1 hour order block is high probability, but in my eyes, it's not high probability. There is a good chance that it'll be respected, but in my eyes, it's a medium chance that it will go in your way, will go against you. So I tend to try to trade with 4-hour order blocks or above, and those are my high probability setups. So as you can see, what you would do is say you're looking for a trade in this area and you see price create this last down candle before this up move that then overall trade it above these highs. So you're overall anticipating price to continue bullish. Why? Because depending on what you're looking at during the week, you could be looking for overall bullish scenarios. I'm not going to be going over every single thing. I'm just going over high probability and low probability order blocks. And as you can see, this would be a high probability order block. Why? Because we saw that price created this order block after having a false break and having this liquidity grab of these lows right here. So it had this false break of the lows, and then also created this order block. So in our eyes, we're anticipating price will have this low respected. Why? Because it cleared the liquidity below this low, and we're overall looking to get the liquidity above these highs. And as you can see, price traded higher, had its retracement, and now it's trading at this 4-hour order block, where it then had a push high. If you go down to the 1 hour, you can see it had this push for about 212 pips. And mind you, this is on an intraday basis. This is all intraday basis. I'm gonna find another example of a 4-hour order block being respected. We're going to look right. Maybe this week isn't the best example because we trended up all week, but we'll look for another example for, say, right over here. We're going to use this last down candle right here before we start to consolidate before this up move. Or you can even use this candle, but personally, I'm gonna use this candle here because this is the candle that ended up being respected. So this is that 4-hour order block that we're going to be looking to see a high probability setup form. And as you can see, similar to that daily markup we were looking at right here, similar to this daily setup with this order block and these all respecting it, is very similar to what we're seeing right now on this 4-hour. We see price traded higher, leaving this order block. Price retraced back into it, started to consolidate before then having a push, before having a push of about 580 pips. And then mind you, that's just one move. Then again, price traded back into it once again it traded into it. But you guys got to keep this in mind also. The more times price trades into an order block, the less likely price is going to hold that area. You want to be able to catch trades off of order blocks the first time price taps into it. So the best trade scenario would have been right here when price traded into this order block for the first time. This would have been the highest probability setup you could have found. Even though it did respect it a second time, you wouldn't have known that at the time of looking for these trades. You would have had it kept in your mind that, okay, this is the first time it's respecting this area. We're anticipating price to travel higher. And in this case, it did. And then when price came down once again, you got to keep in mind that even though there is a chance it can respect it, that that is no longer a very high probability order block. It's still high probability, but the chances and percentage of it working are low, because you guys got to think of trading as probabilities over possibilities. There is a possibility that it can respect this area and can go your direction, but putting on a probability point there now that is respecting a second time, the probability is going lower. So even though in this case scenario it did trade into it and had a strong reaction, trading even higher than it did previously, this time we had about a 700 pip move from this 4-hour order block. So, and you can see then it overall traded even higher. But these are all high probability order blocks. These are the order blocks that you want to use. You want to use high probability order blocks, meaning look for 4-hour order blocks, look for daily order blocks, look for weekly order blocks. And now I'm going to take you guys to the weekly time frame. I'm going to show you how the market is very fractal and doing the very same thing all the time. So what do we see here? First thing that comes to my eyes is this last down candle came down, cleared these lows, had this false break. Did it trade into this order block down here? I don't think it did. It didn't trade into the order block. So we had this false break scenario, clearing these lows, grabbed the liquidity, and we had a strong push upwards. So at this point in time, price traded higher. So this is now a weekly bullish order block. So what do? We pull that. You can see that price is holding within this area this whole time. And we're going to also pull the 50% of this order block also. It's very important to refine your order blocks because you could get entries such as this. Look at this, for example. When price traded up higher, we had this retracement back into the 50% of this bullish weekly order block. This is high probability. Why? Because it's respecting a weekly support resistance area. I'm gonna just say support resistance, even though it's just an area that price is likely to see a reaction from. So it's a key area to pay attention to. And as you can see, when price traded into it, had a crazy reaction to the top side. Not small. It's on the weekly. It moved up about 1,700 pips, which is crazy. Then again, now we're trading into it a third time. Then from here, we traveled up about another 1,000 pips. Then we traded into the week after again. Then we rejected up again about 1,200 pips. Then we traded into it the week after that again, traveling up about 1,000 pips. All from this one small area that we could have been paying attention to. And even though it didn't trade off the high of this order block, you can still see that price is still showing the willingness of staying above it. So it's still showing you that this order block is being respected, and there is still a high chance that price is going to continue bullish even higher. Why? Because this is a high probability order block. This isn't a 15-minute order block. This isn't a 5-minute order block. These order blocks are what the banks are going off of. These are what the banks are using. Not using, but these are the orders that the banks are creating. They're in on the daily, the weekly, the monthly. That's where they're trading on. So when you see candles like this on the higher time frame, it shows you that you're trading on the side with the big money. You're with institutional, with smart money, whatever you want to call it. And that's the side you want to be trading on. But just look at the reaction it has from these areas. Now I'm going to show you guys a low probability order blocks and how they tend to get traded through and not respected. So as you can see, I'm going to just find some random examples. As you can see right here, we have these 3 or 4 down candles before this up move. You can see price did respect this area. You can see, you could probably even pull your fib from this area. You'll potentially get a fib long scenario. So you saw a whole bunch of confirmations right here. You had this, say, I'm gonna just call it, maybe it's an hour order block, I'm almost sure. Maybe 30-minute. You can see we had this 30-minute order block right here. We were respecting it. We were overall looked to go higher. But keep in mind, this isn't a high probability. Why? Because it's a lower time frame and a small candle in a small portion of this big picture, this big perspective. And you can see price overall consolidated before trading through it very easily. It didn't show a willingness to, even though it showed a willingness to want to go higher, it showed no reason to go higher. And that's just one example. We can also look at this other example, at this last down candle before this last up candle before this down move. We will possibly be looking for a reaction when price comes and trades back into it. But as you can see, price trades through it immediately, showing us no willingness to respect it. I'm going to show you another example because, guys, these are things that happen all the time. On the small time frame, they get violated very easily. Let's look at this example right here. In this case scenario, you can see this last up candle. Zoom in. This last up candle before this down move, price traded into the order block, and it did have a move. It didn't have a major move, but you can see price traded into it. Then price traded into it once again, having a small move, but then overall traded through it, and it wasn't a long frame move. Even though, yes, you could have been able to have a winning trade. This is about 300 pips. This isn't a trade you're able to hold long term. The reason people want to have high probability trades is because you can have runners that will continue to run and run and run. That's what you want. You want to have short-term trades that have a potential of running over time, because those are the highest probability trades where you can make your 1 to 3, your 3% on the trade and still have a position run and run and run. Those are the probability. Those are the trades you want to take. So I'm gonna end this video here. There's not really much to it. I have many videos on order blocks. So if you want to watch those, make sure you go ahead. But make sure when you're looking for order blocks and when you're looking to take trades, go with high probability order blocks. Yes, I'm not saying low probability order blocks don't work, but you have to pair those order blocks with what's happening on the higher time frames. There's a lot of other things I look for besides order blocks to take a trade, but this is just strictly showing you what is a high probability order block and which order blocks to use. You want to use high probability order blocks, which are 4-hour order blocks and up. Yes, you can use a 1-hour order block and maybe call it a high probability order block, but personally, I wouldn't use it myself as a high probability order block. So stick to the higher time frame order blocks with a lower time frame analysis and just see the things you could do, back test it, forward test it, and just take notes and study it. That's how you're going to get the experience you need to overall understand these concepts. So make sure you do that. And that's really it. So hopefully this video was helpful. Hopefully it was informative. Hopefully I was able to teach you something you didn't already know. And don't forget to fear being average. And I'll see you guys in the next trading video.